What's up, guys? Welcome back to another episode of the Mathis Real Estate Group show. This week we're going to be talking about how to buy a home in 2020. So let's get started. Okay, so I was just told that was a little aggressive start to the show. We really are excited about how to buy a home in 2020. And we're not going to get into whether it's the right thing to do or not the right thing to do. I'll just go ahead and say that it depends on your situation, if it's a good investment for you or not. So what we're gonna dig into in this mini series on buying a home is basically how to do it. So we're gonna go through some of the steps today, and there'll be other parts to this series. So the first thing we're gonna talk about that you need to get in order before you think about purchasing a home is getting your credit and your debt in order. So the first thing we look at, we hear a lot of, is my credit is not good enough to buy a home. Now, this is one of those it depends situations. So credit can be anything from typical credit score, a perfect score is 850, and it goes all the way down to like 300. So it's a broad range. And typically what a lender is looking for is around 640 or above for a good credit score. Now, that being said, we've seen it done with lower scores if you have assets, or say you make a significant cash income that you can prove that you can, you have the assets available to purchase the home. They may work with a lower credit score. Now, the benefits of having that higher credit score is that you are going to get a lower interest rate or potentially a better loan program. So credit is the first thing you want to work on if you are thinking about purchasing a home. And a side note on this, one interesting thing we're running into right now is that a lot of younger people who are looking to buy homes sometimes don't have credit at all. Right? They've done everything cash, and it's fantastic. So it's not that they don't have good credit, it's that they have no credit. So it's a good thing to have one or two credit cards just to establish a credit line. You can pay them off every month, keep the balance below 50%, treat it like cash, just have those credit lines established so that you can purchase a home. The other piece of the first point is your debt. So a lender is going to look at what type of debt are you carrying? And typically we talk about this in something called debt to income ratios, or DTI. You'll hear people talk about this, especially when you're first applying for a loan. And all that means is they're looking at how much of your income do you spend on debt. So debt can be anything from your student loan payments to your car payments to maybe you bought some couches on a credit card. Whatever it is, they're gonna look at that as your debt to income. And the typical ratios they look for, they would like for your mortgage to be around a 28% DTI. So basically they don't want your mortgage or rent payment being any more than 28% of your total income each month. The high range that they'll go to is 43%. If you have good income and you have assets, maybe some savings, they'll work all those in and work those factors in. But we typically 43% is the high end, 28% is what they look at for your mortgage, 36% overall is the DTI number they look at, combining your rent and mortgage payment with all of your other debts. So that's an important piece to look at, is if your debt is really high, what are some steps you can do to reduce your debt so that your DTIs drop below those minimum numbers that the lenders require? The second key thing we get questions on a lot is down payment. Down payment is one of those funny things where it used to be 20% down, no questions asked, conventional loan was the only way to go. So you had to have at least 20% of your total purchase price to put down on a home. So for easy math, $100,000 home, you need $20,000 to put down on that home. And that is still kind of the prevailing sentiment today, and we don't discourage that, because the more you can put down on your home, you don't have to do certain things like PMI on your home, private monthly mortgage insurance, which can add additional cost to your monthly payment. So we're not against putting 20% down. There's just alternative programs now where you can put down as little as 3%, and in some cases, they'll let you do 0% loans if your income's good enough, if your credit is good enough and you qualify, and if you have assets to do that. So there are other ways to buy a home. The typical purchaser right now is between that 3 and 5% down is what we see mostly. In some cases we see 10%, and sometimes people are rolling in money from selling a home that they rolled that amount that they sold the home for into their next home. So Don't get discouraged if you think it needs to be 20%. It can be 3% depending on if you qualify or not. The other thing to factor into this is not just down payment, but also closing costs. So closing costs can be everything from your loan origination fees. It can be, attorney fees, home inspections, appraisals. There's a lot of costs that go into buying a home, and we see these be around 3 to 5% of the purchase price. Can be higher, can be lower, and depending on the purchase, we sometimes get the seller to actually pay for these for you. So that's something we can work on if you're interested in buying a home. That's not a major hiccup that we run into, because we have seen it done more often than not where we can get the seller to pay for those. The third thing you want to do after you have those first two categories knocked out and you're sure that you can buy a home, now we want to know, what are you comfortable buying? So when we think about home prices, people get intimidated sometimes thinking about the shift between $250,000 home to a $275,000 home, because it's an additional $25,000 and it sounds like a lot of money. So what I like to do is say, well, let's back into this and say, what are you currently renting your home for now? What are you currently paying in rent? Let's get a monthly rent payment, and from there we can speak with our lenders and they'll help you figure out what does that correlate to in terms of a mortgage payment per month. And if that's what you're comfortable with, or you want to go up a little bit or down a little bit, we'll take that mortgage payment and they'll figure out what's called a PITI payment. So principal, interest, taxes, all that, they'll figure all that in, and then that'll correlate to an actual mortgage payment, which we'll take that over to and see what the home price will be on the other side of that. So we can back into it that way instead of just trying to throw a number out, and figure out, pull it out of midair and say, oh, I want to buy a $250,000 house, but you can only afford a $200,000 house. So we want to make sure we get the numbers right on that. And I always suggest starting with what are you currently renting right now. Let's start with that payment and work our way back from there. So those are the first three key things that we recommend thinking about if you're looking at purchasing a home in 2020, is looking at how's my credit, how's my debt. Go figure those out first. And if you're not sure of those, you can come talk to us. We have lenders that we can talk that will talk you through all this. They can pull those reports up for you and say, this is what I'm seeing. Oftentimes, if your credit isn't high enough or where you want it to be, they can say, well, do this, pay this off, or do something over here. They can give you some advice on what will help bump your credit score up quickly. Save for that down payment. Be stocking some money away for your down payment and also your closing costs. Just in case the seller won't pay for them, you want to have that flexibility that you're not dependent on a seller to pay for your closing costs. And the last thing is determine your purchase price. So just make sure that you're thinking in terms of what am I currently renting for right now, and do I feel comfortable with that on my home purchase. Of how to purchase your home in 2020. Again, you have any questions or you want to know anything else about how to buy a home in 2020, reach out to us. You can DM us on here. You can call us at 919-867-1400. You can go to our website, mathisrealestategroup.com. Send up a smoke signal. If I'm outside, I'll look for it. I'll be sure to get back to you. But seriously, any questions, guys, reach out to us. Let us know how we can help you or answer any more questions on this. Part 2, we'll continue digging into other things you need to do to help you buy a home in 2020.